The U.S. multifamily sector has had a solid 6-year run with increasing rent growth, declining vacancies. Well, that all came to an end in fourth quarter of 2016. Key fundamentals have propelled the multifamily sector over the past few years, including favorable demographics, continued job growth, and increasing renter household formations. But along with all these positive drivers, there has also been a lot of new supply. And now that much of that new supply is starting to hit the market, job growth is moderating and oops, there's a little too much supply in some submarkets and not enough demand. Keep in mind that at a national level, there isn't an oversupply issue. But the problem is that a lot of this new supply is concentrated in about 12 metros and in a handful of submarkets within those metros. That's why supply is expected to outpace demand in some of these very same metros over the next 12 to 24 months. This mismatch of multifamily supply and demand includes places like Houston, which is expecting more than 9,500 new units this year, but could end up with demand for only about 4,000 units. Boston is another example, with more than 9,000 units expected, but multifamily demand could be fewer than 1,500 units. But other metros are actually experiencing just the opposite. Orlando and Phoenix are both poised to see some of the best job growth in the nation this year. Orlando could see demand for 7,800 units, but only 5,300 or so are expected this year. Phoenix is also likely to be undersupplied, with possible demand for about 12,000 units, yet only 6,000 are expected to come online this year. The outlook for the multifamily sector in 2017 is positive, but more subdued than in years past. The national vacancy rate is expected to rise to about 6% by year-end, but that would reflect merely a return to a more normalized level. Rent growth is expected to moderate and likely be in the 2% range. It's important to note that this slowdown is expected to be short-lived, maybe 12 to 24 months or so. After that time, it's expected that the multifamily sector's underlying fundamentals will improve as new deliveries slow down and assuming that job growth and demographic trends remain stable. To read this month's report and to find our Metro Outlook reports, please visit fanniemae.com/multifamily.